So I asked in a previous video, does money evaporate? Generally speaking, the answer is no, but there can be exceptions. We normally think of money as taking the physical form of coins and banknotes, but most money does not exist in that form. Most money exists in the form of printed numbers on bank statements and in building society passbooks. I learnt to read as a child using flashcards, and now I have made some very simple flashcards to explain to you how the banking system works. I deposit £1,000 in a bank. The bank then lends out 90% of that money, being £900. You borrow £900, you spend it in a shop. The shopkeeper banks for £900, and the bank then lends out £810, being 90% of what you banked. We now have two loans, one for £900, one for £810. The total is £1,710, deriving from my initial deposit of £1,000. The banking system has just created £710 of purely fictitious money. And it doesn't stop there. The banking system will continue to create fictitious money. The banking system is based on two foundations. The first is an assumption that people will not want their money out of a bank all at the same time. You may have seen the film Mary Poppins, in which a little boy accidentally sparks a run on the bank. I'm not sure there's one bank in the world that can withstand a run on the bank. If we all want our money back at the same time, the banking system almost certainly collapses. The second foundation of the banking system is that loans will, generally speaking, be repaid, and generally speaking, be repaid at a rate of interest. You borrow £900, you repay more, you may pay more, like £1,000 perhaps. And you may think that's profit to the bank. Maybe, maybe not. Maybe someone else who borrows money will default and not pay in full. In which case, the profit made from one loan may merely offset the loss of another. So the reason that banks charge interest rate is partly to offset losses. And another way of having offsetting losses is that many loans are secured on property. You have a mortgage. If you can't make the repayments, the mortgage lender will take the house away from you and sell it, and thereby, in theory at least, recover their money. The problem arises, what if a lot of people can't repay at the same time? The banks can take lots of houses away from people, but when a lot of houses come on the market at the same time, prices tend to fall. And that, in a sense, is why you have recessions, or certainly why you have housing market slumps, is because lots of people default on loans at the same time. But then, maybe it's not the fault of the banking system. Because if you default on a loan, is it the bank's fault? You might blame the bank, you might say that your interest rate was a bit high, and that if you'd been lower, you might have been able to repay in full. At this point, you might think I'm contradicting myself. You might think I've just previously said that interest rate cuts are not good for the economy. There is an argument against high interest rates. You can argue that the higher interest rates are, the more people will have to repay on a loan, and the more likely are not to repay in full. But that in itself doesn't really answer the question of why the banking system will from time to time collapse under a weight of unrepaid loans. If you borrow money from a bank and you really pay the substance of the loan, not the interest, then you've basically let the bank have their money back. No, I don't think interest rates are really the main problem here. It's just easy to blame them when things go wrong. Why do people not repay loans? I don't know. Is it because they're irresponsible? Is it because they're unlucky? Is it because they borrow other money and find they can't just repay it all? Is it because they lose their jobs? There's so many factors at work here that it would be a mistake always to blame the banking system when things go wrong. But the nature of the banking system is that when things go wrong, things will often go very badly wrong, because the existence of lots of fictitious money can, if you like, magnify the problems that exist. But that doesn't mean the banking system is wrong in itself.